The 2013 edition of Outrageous Market Predictions report was a great success. What inspired you to write last year's report and make it available to the market?
The idea behind writing Outrageous Market Predictions for 2013, it actually started off as a bit of fun. You know, let's have a bit of fun with markets and come up with some crazy ideas where there's actually an ability to make money. And I guess herein is the crux of it. Successful trading and investing is not about predicting what's going to happen in the future. It's about being able to respond to what's actually happening right now. So there is a bit of a play on words in there too, because as a business we don't profess to be people that predict. We look to do, which is a very, very different thing. But we had a lot of fun writing it, and all up our predictions actually proved to be pretty solid over the course of the year, I'm pleased to say.
Last year's report actually ended up ranking number 3 on iTunes as the most downloaded iBook. It was also selected by iTunes as new and notable. Were you surprised by the result? And what do you think caused such an interest in the report?
Look, I'll be honest with you, I was a little surprised. Our goal this year, of course, is to be number 1 on iTunes, so hopefully you can help us achieve that. But I guess people are always curious about what's around the corner, and putting a publication together like that really does open the door as to how professional traders and investors see the market, and perhaps where they see the opportunity there, and giving people a really good sort of heads up and an opportunity to see for themselves what we're expecting to come out of the markets. I think probably was the catalyst for the demand from people wanting to download it and read it and hopefully act on it and make some money. Yeah.
How accurate was the report in 2013?
Accuracy is an interesting thing. We got it spectacularly right on some occasions, and equally we got it spectacularly wrong on some others. And what I was really pleased with was that our calls on the big markets, the serious markets that we do trade very, very heavily, we were on the money with our calls, and perhaps we might explore a few of those views as we go through this interview. One that we were massively out on was Facebook, and really last year when I wrote Outrageous Predictions, when it came to Facebook, it was a question of where we saw the revenue growth within the business. And as a business, it certainly found huge revenue growth, and we're partly attributable to that because this year it was a new thing for us, and we've actually started marketing on Facebook too, and lots of other companies have done the same, so that's really where the revenue growth has come from. And what I'm very, very pleased about is, whilst our prediction on the stock was wrong, we've actually traded it for substantial profit, I think on at least half a dozen occasions this year anyway. So to go back to my initial point, it's never about predicting, it's actually responding to what goes on. Our prediction was wrong, but we've traded it for profit anyway, which is the key thing.
How did you manage to turn the Facebook result around to work in your favor?
To be successful in any kind of business, and particularly with trading, you can't be dyed in the wool and stuck in your ways. And I guess by that we could sum it up with a nice cliche: do you want to be right or do you want to be rich? Because they're not the same thing. And in that instance there, our prediction for Facebook was way off the mark, and very fortunately we've got good quality analysts that cover the US market, and every time they identified an opportunity for trading that met our criteria, we've taken the trade. And we've done that with a variety of strategies. We've done it with covered calls, we've done it with calendar spreads, we've done it with diagonals, and we've also done it using iron condors. So we've had a whole gambit of different ways of trading that stock for profit. And that's the great thing about having a dedicated team of analysts that actually follow the market minutely on a day-by-day basis, as opposed to just being governed with a big, outrageous prediction for what we expect for the year. That prediction was wrong, put it in the bin, and let's actually trade what's going on for real and make some money.
There were a few popular chapters in the report that drew a bit of attention, namely gold, oil, the US economy, and the Australian economy. What was your forecast in these markets, and why do you think they received so much attention?
Well, look, I think those markets and economies are the big four, certainly for our clients and most of the clients around the world. And if we look at what our views were, gold, for example, our forecast was to see it at 12,000 or 1,200 an ounce. We're at 1280 right now, so that prediction proved to be very good. We had some good shorts on there and some nice profitable trading, and in fact we're looking for a swing back the other way. The factors that drove that prediction were a lower inflation global environment, which we've certainly seen, perhaps some of the risk of financial Armageddon falling away, which again took some of the risk premium out of gold, and indeed the commodity price of that did drop well in line with our expectations, and we've called that very well. Looking across at some of the other commodity areas, crude oil was also an interesting one. I was expecting to see crude trade down, perhaps down to around about $75 or $77 this year. We haven't seen that, and part of the reason for that, our initial forecast was based on a slowing global economy, where demand for crude was perhaps coming off just a touch, and perhaps a little bit of a settle down in the global political spectrum, but we certainly didn't see that with Syria flaring up in the middle of the year and a few other factors. They're just supporting oil there, and in actual fact very pleased to see that global demand hasn't slowed down, because it does go to underpin the strength of the global economy, which is, as traders, what we always want to see. So whilst we weren't on the money with oil, it's provided certainly a supportive trading environment, and we've in fact had multiple occasions again with oil where we've been able to trade it for profit too, which ultimately the most important thing is banking money as opposed to just writing a prediction. A couple of the other big areas that people were interested in looking at, obviously domestically, at the Australian market and then at the US economy too. And if we firstly consider the Australian economy and how that's fared, some of the things that we were looking at last year, obviously a year of a general election, we were expecting political change, which we saw, and I think the Australian markets responded very, very well to that. We're also expecting further cuts to interest rates, and our forecast was for 75 basis points, 0.75% to be cut from interest rates, and from the start of December, where we saw one and we've seen a couple more, we've actually seen that fulfilled. And that's really opened the gateway, if you like, for more money to flow into the economy. We've seen it with a stronger property sector, there's no question about that, and we've also seen it with our stock market. And rest assured, as we write our 2014 prediction, I've got some fairly interesting views on what's going to happen with the Australian stock market and economy, and of course we'll be sharing those in our outrageous predictions for 2014. But we did call the Australian market very, very well, and it is our pet market. It's where we live, it's where we trade, and so it's very pleasing to see us on the money. Looking at the US economy, the US economy was also very interesting. We have seen a very loose monetary policy where we've had literally billions, 85 billion a month pouring into the economy there, and with such a huge flow of money going into the economy and with such low interest rates as well, we've started to see those green shoots that we identified last year really coming through to fruition. The US economy has looked like it's turning the corner. Recent data has still shown that unemployment is quite high, but there's been evidence of stronger economic activity. We've seen house prices up 12% for the year. We're seeing the stock market getting back up close to that 15,500, 16,000 level too, which is very pleasing. Companies have continued to generate good quality profits, and that's rewarded investors in those markets too. Maybe some of that growth in profit has come from those companies cutting costs a little further, as opposed to a growth environment where there's been earnings growth as well. And that's for something that we will be commentating on and putting a prediction out for 2014 as well, which will be interesting to see what our views are there. We certainly have a very, very interesting opinion as to where our expectations are, and I know that you'll want to read that too. But quite happy with the way that we called the US economy last year. We're still seeing a weaker US dollar, which we believe is strong for the US economy, something we expected to see and have been able to take advantage of on a number of trades too. So that game plan worked out very well for ourselves and of course our clients.
Okay, Andrew, what can we expect in the 2014 report?
Look, this year's outrageous predictions for 2014, I think we're going to see a couple that you might consider are out there, but I believe that those views will come to fruition. So we've got a couple of fairly aggressive calls that we're going to be making in there. The key thing we're going to be focusing on, obviously, are our major markets that we trade, and also our preferred stock and sector plays as well. So for those people that are actively involved with the markets, there's going to be some really good here's the cover of the jigsaw puzzle box kind of thing to give you a really good outline as to what we expect to see from markets next year. I do believe we're going to see some big changes in the US. We're going to see a change in the person at the helm in the Federal Reserve, and I think that will make a big, big difference in terms of the way that the US is approaching the management of its economy. And within that, and possibly most importantly from a trader's perspective, there's going to be a massive opportunity, and this is one you certainly don't want to miss out on.
Looking at the 2014 edition, what is the most effective way a trader or investor can use the report in 2014?
Look, I think it provides a good background as to how we see the trading environment and where and why we see the opportunity. And when you make money-making decisions, it's all about confidence, and the bigger the level of confidence you have through reading research or understanding the basis from how that research has been generated, the more comfortable you can then feel on the back of those trading recommendations. And look, if you feel more comfortable, chances are you're going to take a bigger position size. and if you take a bigger position size, well, you're going to make bigger profits. It's as simple as that. So, it does provide a lot of flesh on the bone for people that are trading, and perhaps give them a bit of a different perspective, not from a research analyst perspective, but someone that actually is trading those markets themselves, and really giving the full flavor of how and why they make their decisions.
Do you have any final words for our traders and investors?
Do make sure that you register your interest on this page. Actually, you can pre-order your advanced copy of our outrageous predictions for 2014. It will be a great read. As I said, we had a lot of fun writing it last year, and we're enjoying writing it this year, but the most important thing isn't the writing, it's the banking of profits on the back of our calls. Enjoy the read, and don't forget to register for your advanced copy right below.